as we've been trying to open new doors for the entrepreneurs within the hackathon builders, within our talent community at Ken's, we reached out to the investors of Ken's, Bida Ventures, who told us that the person that we trust the most, that we like the most, is Patricia. I met Patricia and I understood instantly why. Patricia has had multiple careers, from years at Accenture to years being a chef, and now to being the co-president of the MIT Angel Network in Northern California. It's a network of more than 700 angel investors from MIT. It's, seeing pitches, seeing people present themselves is something that Patricia has been seeing so many times. Seeing career switchers is someone that Patricia can personally relate to. And so today, a bit unlike the session yesterday, which was almost entirely pure workshop. So everybody would come up with their 50-word introduction of how they would introduce themselves in an event, and then Patricia would give feedback, and all of these guidelines allowed people to come up with a better pitch throughout the course of that workshop. And everything is recorded on Ken's/hack and the link that we sent you this morning. If you're dialing into the Zoom link, that means you've seen it. That's extremely important, and this came first because when you go and you want to explain your idea to somebody or your business, whether you're looking for funding or whether you're looking for business, like new sales, or you're looking to recruit somebody, how you communicate it in less than 15, 20 seconds matters a lot for you to be memorable. And that happens at a very high frequency. Hey, how are you? What do you do at a dinner party? But today is the continuation of this, where if somebody you meet at an event is impressed by you and would like to invite you to pitch for funding, is today's example, but that pitch could be for getting a new client, or pitch to appear in some kind of media outlet. But today we're going to focus on the investment part, but this can be transferable. A pitch is a pitch, whether you're trying to sell something through an investment or a client or whatever the case may be. I'm going to stop my intro and I'll pass it right over to you. And we're going to use the chat in a focused way. But we're going to go through the anatomy of a world-class pitch with Patricia for an hour, and then an hour of actual workshops with a lot of you. Over to you.
Great. Thank you so much, Roy. That was so well said. Thank you, everyone, for joining today's session. If you attended yesterday's workshop, welcome back. And for those who didn't meet me yesterday, I am Patricia Liu, and I am a startup pitch advisor and founder of Venture Ready Pitching. I work with top-tier startup advisors or accelerators in advising founders on demonstrating the venture scale potential of their company. I also teach on pitching across the Stanford ecosystem, and I run MIT Angels. As Roy mentioned, we're a group of 700 angel investors, all MIT alumni. And with my different roles, I see different insights and perspectives around the pitch. I see how they are crafted, and I work with founders in coming up with their pitches. I also see how pitches are received by investors. And what's different about me is I'm in those closed door discussions where investment decisions are made, and I meet with VCs regularly and get to hear how they're thinking about investment opportunities and also how they're looking at companies and their pitches. And today I want to talk about how to think fundamentally about pitching. And I want to start with that ultimate goal of pitching, because I think not enough time is spent on really thinking about what is the target that you're aiming for around a pitch, and also along with that, the audience considerations. which is very important. It's important to consider who you're talking to. And then I'll go into more of the mechanics and nuts and bolts about the pitch deck, starting out with that overall narrative, and then going to the parts of the deck, and then constructing impactful slides. Now, what you figure out about your company through going through that process of creating your pitch, it's applicable towards not just fundraising, but looking for partnerships, finding co-founders, employees, selling your product, etc. And if you truly understand what I talk about today, it's going to help you with every facet of your startup journey. But I do want to start with a disclaimer. If you ask 10 successful founders and investors how to approach pitching, you'll get at least 8, if not 12 different answers. And mine is just one of those answers. You can follow some of my advice, none of it, or all of it. But I just urge you that whosever advice you follow, that you be very intentional about it and think about whether it makes sense to you, it feels authentic for you, and gives you confidence. So I want to start by level setting on some very basic terms. The first one being venture scale startup. And that's a startup with the potential to reach $1 billion valuation or more within a relatively short amount of time. For what with SaaS is about 7 to 10 years. For AI companies, it's about 2 to 3 years. And that $1 billion valuation translates to 100 million ARR, annual recurring revenue. So it means that the startup has market dominance, large market size, and high revenue potential, hypergrowth, and scalability. And then the second term to really understand is venture ready. So the startup is demonstrating a strong potential for growth and very well-defined path to being profitable. And that means that they have a solid team, they have a compelling value proposition, they have product market fit or on their way to a clear product market fit, demonstrate traction. And then with AI companies, especially now, is a capital efficient growth model. And then the third term is around investment thesis. And that's a VC. Each VC has their own investment thesis, which is their defined strategy for how they're evaluating investment opportunities. This thesis is shared with the LPs that have given the money into the fund, and it's a VC's description of how that fund will be invested or deployed. I want to take a quick step back for those who are not as familiar with the VC strategy or the model is that so LPs, limited partners, give money to the general partners or the VC, and they contribute into this fund. And then the VCs have a certain amount of time to then invest that money into startups. So when LPs, so limited partners, decide whether they're going to give money to a particular VC, the VC has described how that fund will be invested and through this investment thesis. And that investment thesis includes things like target sectors and technologies, preferred company stages. So whether they're that VC investing in early stage, like pre-seed or seed, or growth stage, which is, after like Series B and then or a later stage, or in the evaluation criteria and expected returns. So if your company is outside of AVC's investment thesis, chances are really slim they're even going to take a look at your company because they've already made that promise to LPs that this is primarily how they're going to invest. So if your company's outside of that investment thesis, then the chances are super slim that they'll look at it. So in general, about 10% of a VC's fund is invested outside of that investment thesis. So you can see how kind of that breakdown ratio is. And then the last thing I want to talk about is that some sample data points. So A VC I know has a small medium fund, about $65 million. And in a given year, they receive about 6,000 pitch decks. And from there, they take about 1,500 meetings and make only 30 investments. And that's pretty generous, 30 investments. Some make even less. And so you can kind of see the drop off at each of those stages. So this is why pitching is so important, and that pitch deck is so important, because you see how competitive that is. And along with that, the average amount of time that VC spends in reviewing a deck is only 2 minutes and 18 seconds. That's not a lot of time, but in actuality, VCs know within the first couple of slides whether they're going to just skim through the rest of the deck and say no, or they're going to actually take more time to read it. And a lot of that is because of the hidden clues. And I consider hidden clues, it's the things that indicate things about the founder and the company that's not immediately apparent. So things like the narrative, how the founder is explaining the company and the way that what topics are they covering and what sequence that they're covering, indicates what are the topics that founder is really focused on and what topics that founder thinks is important. And that indicates a lot about how the founders are thinking. The amount of detail that is in the deck shows a lot too, because if the deck has so much information, then it says that the founders don't know what is essential information and what's superfluous and extra, not needed. And then attention to detail is important, because I don't know of a single profession where attention to detail is not critical for that profession or that person in that profession to do well. So these are three of the most important terms. But most founders I meet don't even know what they actually mean. So how do they even know what to pitch and how to do their pitch in a way that they that really resonate with VCs? So if you truly understand these three terms, then you have a leg up from a lot of the founders, because this is kind of steering you towards that target. So given these definitions and data points about VCs investing, the ultimate goal of pitching, from my perspective, is demonstrating that venture ready, venture scale potential of your company in a way that the audience investor can excitedly and confidently explain your venture after hearing the pitch only one time. And so that you can move on to that next stage. And it's important to note that you're not just stating, oh, we're going to become a venture scale business, or we're going to have that $1 billion valuation, but instead you're giving those data points and signals that the investor concludes from all of those data points and signals that's inevitable that you will be successful. And with that second point, the audience or investor can silently and confidently explain your venture after hearing the pitch only one time, is because you really only have one chance to really pitch, and then they decide whether they're going to continue on with you. And so you want to make it easy for the VC to sell your company on your behalf, because once they hear the pitch, they're going to have to turn around and then sell your company on your behalf to the other VC partners, and then to decide whether they want to continue on with you. So this is why it's important not to have too much information. You're saying just enough to captivate and interest them to want a meeting, another meeting, or continue on to due diligence. And that's why I said to move on to that next stage. Kind of circling back to what Roy was talking about earlier in the intro, I've underlined venture ready, venture scale potential, because if you're pitching for other purposes, then that what's underlined there is going to change. But here, we're mainly focused on investing, but the principles apply to a lot of different types of pitching. The other reason why I've underlined this is because I'm assuming that you're building a solid company and that's investable and venture backable. So that's what you need to really focus on. I'm helping you pitch that idea and show that, giving the right signals and data points to show that you are a venture backable company. So the first critical step towards the ultimate goal is knowing, understanding the audience and who you're pitching to. And for me, it is about tailoring your behaviors, actions, and deliverables based on knowing and understanding that audience, who they are, what they know, and what drives them. Effective pitching delivers what your audience wants or needs in a way that they understand by taking that into account. Is with who they are, it's about their educational, professional background, the type of investor and investing experience that they have. So one end of the spectrum, you've got the beginner investor who's doing it as a hobby, like maybe even friends and family. And then on the other end of the spectrum, you've got the VC angel investor who's been doing it for decades. And what they know is about the level of knowledge about your industry and company. So you're going to pitch very differently if you're pitching at a industry specific pitch competition versus you're pitching to a more general angels group. And then I consider myself and a lot of my fellow angel investors to be what I call the intelligent but ignorant audience, where we're smart enough to figure things out and think things through, but we're most likely ignorant, which literally means without knowledge about the specifics of your industry. And then lastly, it's about what drives them. So, for example, what is their investing approach, the areas of focus and key indicators? I mentioned earlier the investment thesis. That's a huge part of what VCs are focused on. They're thinking about that investment thesis, the growth potential, exit strategy, whereas angel groups may be more focused on the product and the story around the company. And how do you figure out that audience profile? It's like with you doing anything else, by doing an online search, talking to friends, family, and colleagues, and just using common sense. And this is so important, that considering the audience, because if you know how to consider the audience, then you have the skill to consider your customer. And then with the behaviors, actions, and deliverables, it is things like, are you casual and friendly with a certain group, but then strictly professional with another, or your attire may change with attending different types of meetings and events, your communication style, or you're having more slower speech or more frequent check-ins if you're speaking to a mostly non-native English-speaking audience. So my Stanford class goes over 7 first principles, and this consider the audience is the first of those principles because it's that important. From this one principle, it derives so many other things around how you should proceed to have a successful pitch. And so with these 2 pillars, the ultimate goal of pitching and then considering the audience, keep these 2 things in mind for everything that you're doing. So to meet that ultimate goal of pitching, you need to have a standout presentation. And we've all had the experience of hearing a great lecture, talk, or presentation, and where the topics were just the minimum essential ones that you need to know. The narrative was logical and seamless, and it just flowed from one thing to the next. The content was concise and distilled, and the slides were really intentional and polished. And everything was easy to read, follow, understand, and time just flew by because you were so engaged. And then by the end, you were well-informed and energized by it. And unfortunately, most presentations are the opposite of that, where it's underwhelming. And you need a standout pitch that captures and maintain the audience's attention and interest from the start to the beginning with that standout presentation. If you search online for startup pitch decks, you'll get countless templates, examples of topics and sequencing. And basically, it's their suggestion for what makes a standout presentation. And I'll go through one template now so you get an idea of what these examples and templates are like. So I'll go over YC, Y Combinators. So they start with the title slide, which is the name of the company, a short tagline, and then the name of the presenter or the founder. And then they go into describing the problem. So what's the problem that they're trying to solve, that company is trying to solve, the impacts to businesses, to people, and then the solution to that problem. So what is the company's solution or approach to solving that problem that they just described?
I just want
And
to do
then,
a quick intervention just to check in with everyone. So these are like right now, this is the template from Y Combinator. This is one of many templates. Just want to make sure that everybody's fully aware that each slide is one particular topic, and there is this particular frame and flow that is best accepted by the world's largest accelerator on Earth. So for many of you who don't have pitch decks, this is where you start. Now, if we're going to have, if Patricia will show us different ones, then great, but they're almost all going to have different flavors of more or less the same stuff. So even
yes,
though you might think that your business would be a bit unique, you have to explain it a bit more, or sometimes there are some things that you don't want to show. This is not about you, to be fully honest. And one thing that I love about Patricia is that she's super brutally honest. It's about the person on the other side with whom you are looking to obtain something from, an investment, for example, understanding very clearly so that you can end up, so you understand the process that they go through, the easiest way for them to be able to understand, so that you end up in the 30 among the 6,000 and not the 5,970. And pay also very close attention to what's on each slide. If it looks like it's light, because there's just a 6-word title, one chart, and one thing to look at, really. So your eyes go, bam, 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 I get it, in less than 5 seconds. This means that those businesses that end up in the top 30 of the 6,000 that got invested have even more things that they could have put on the slide than you could have at your stage. But they knew what to focus on by just showing these things. And this is where you have to take a very hard look at what it is that you want to show. What is the problem? What is the solution? What is the traction? So that if you were to say, that's the problem, that's the solution, that's the traction, someone says, uh-oh, I think they're onto something.
yeah, yes. And I would say the main takeaway from what Roy just said is there's minimal content. You as a founder need to determine what is most important. And I'll go into a lot more detail in a moment. I don't completely agree with YC's template. It's not one shoe fits all. So but I'll go into more of that in a moment. But I wanted to all of you to have familiarity with what pitch decks look like, and also the pattern matching that VCs have towards pitch decks. So on this slide here, the fourth slide, they're going to description of more of the traction. So maybe revenues made, customers acquired. So that here this example, they have a couple of slides on this. And then followed by a secret sauce slide. So what makes this company or product solution special? What makes this work? And then how the company plans to make money from their solution or product. And then market size slide, which is what is a potential money made, future growth, and followed by a slide on who is the leadership team for this company. And then go into a fundraising slide. What is the ask? How much is the company raising, and how will they use those funds? And so this in a nutshell is Y Combinator's suggestion for the topics and sequencing to use on a pitch deck. And then I've included Sequoia's, and which is one of the largest VCs, and Guy Kawasaki's famous 10 slide template. And I've bolded the topics where they differ across the different sources. Usually when I lecture to a smaller group, I'll ask which one is the best template, and people will have their own opinions. But it was actually a trick question because there is no one right template. It is really thinking flexibly and creatively to reach that ultimate goal of pitching while considering the audience. So it's very important to think flexibly and nimbly about how do you demonstrate that venture scale, venture ready potential of your company that the audience will easily understand. Want to ask any questions so far, Roy, from the group?
Keep going and I'll take a look. So, because there's a lot of introductions, and so the chat has a mix of everything. So, for everyone, please only put in the chat some of like the key questions that you have, and then I'll interrupt Patricia from time to time as I find something that fits. And then
Okay.
we'll keep going. Maybe in a slide or two, I'll have some curated questions for you. But I'm getting a lot of we're good, very interesting, very grateful. There are some questions that are going to start to pop up, of course, but let's give it another 5-6 minutes so that you can think thoughtfully of your question.
Sounds good. So now I want to go through more of the nuts and bolts about the pitch deck, and I want to talk through the framework for coming with a pitch that meets that ultimate goal. So to achieve that ultimate goal of pitching, you want to start with what I call storyboarding the narrative, and that process takes 3 steps. The first step is to determine what are the key topics you need to cover. What are the minimum essential topics that's appropriate for that audience and event? And minimum, so you're not distracting the audience or investor from anything else, because people have short attention spans to process and retain information. Think about the VC who receives the 6,000 pitch decks, right? They want to go through it very quickly. So they're gonna, if you're covering too many topics, they're not even going to pay attention. So we looked at the sampling of the key topics from 3 popular sources. There's so many other sources out there, but I think there's an even more minimal list to meet that ultimate goal. And the core topics, I think that needs to be included are these ones that I've listed here. And you'd be surprised a lot of decks don't even cover core topics. One of the big infractions, 2 of the big infractions I would say is a lot of pitches I see don't include business model. They're not describing how they're going to make money. That's a big red flag. Or they're not including their traction. So this list are the core topics I think must be covered across all pitch decks. And then there's also the as needed. And as needed, I want to make a clear distinction. It's not optional. It's as needed to show the venture scale, venture ready potential of your company. And I want to also be clear that the topics I've listed here in both lists, it's not a suggested sequence. It's just it's a list. I'll go into each of those topics later in a moment, but I want you to get an idea of what are the core topics I think every pitch needs, and then the ones that are as needed that you may want to include to demonstrate for that ultimate goal of pitching. And so once you've determined what are the key topics you want to cover, then you want to sequence it logically for a cohesive progression with the noteworthy topics earlier on. So you're not just stringing together a whole bunch of topics, because if you do that, it will come off as very choppy and people won't be able to easily follow your pitch. You want to have the strong introduction, so you want to front load the important and noteworthy attention grabbing things early on, and then immediately focus on what's attention grabbing and the important. So you capture people's attention, that people get excited, engaged, and it's memorable. And the first few seconds and the first few slides of a presentation are critical, regardless of how long your presentation is. And this is similar to what I talked about in yesterday's session on the networking pitch, where we want to start with the attention grabbing, noteworthy, memorable, so people immediately start pay attention to you. And these are some examples of facts I heard during pitches of early stage startups. So I personally heard all of these facts during pitches. And one company, early stage company, already made $10 million last year. Another one had 8 million downloads. Another one had over half of the patents in their space. And it goes on. And the moment I heard these facts, I immediately sat up and took notice and paid a lot more attention to the company and considered the startup a lot more investable. But unfortunately, in every one of these instances, I heard these facts towards the end of the presentation or even during Q&A. So imagine if I had heard these facts from slide one, I would have been paying a lot more attention from that slide one.
Patricia, there's a pertinent question that ties to this.
Yes.
What if I'm at the pre-seed stage? Is there a difference in pitch decks when I'm at the pre-seed stage and don't have that particular traction or any customers at the moment?
Yes, I mean, there's other things that are amazing about you. So, you may have a great team, amazing team, or something else, or if you don't have the revenue traction, you could highlight something else. It's working with what you have. So, brainstorming all the great things about that's going on with you and your company and in your team, all of that, and then figuring out of everything that you have, what is going to stand out most. So I had a student um, who had a very early stage company, and he had amazing investors and advisors that had nothing to do with the space, but they were, one was the ex CTO of Palo Alto Networks, the other was the ex co-founder of Amazon AWS, and but you want to. And I suggested start with that, even in your pitch, in your networking pitch, even because that gets someone's attention. Or another company I heard pitch, they had um, the founder of $100 billion company who invested in their startup, and it had nothing to do with the space they're working in. They were super early stage. And so my suggestion was, instead of leaving it towards the end, start with that, because that immediately gets someone's attention. You work with what you have, because you can't make stuff up, but you need to think about, okay, what are all the things I have going for me? And then figure out what will get someone's attention more or most.
We're getting a lot of questions like this, so Muhammad. Same thing. So you saw three different formats that Patricia showed from Guy Kawasaki, Sequoia, and Y Combinator. Ultimately, the information is going to be there within that presentation because they have that allocated time. But the biggest risk that you're facing is that within the first 2 minutes you get tuned off. So is that correct, Patricia, that regardless of the flow that are shared, like for example, title slide, problem solution, magic sauce, or problem solution, market size, or problem solution, business model, should it start with the most attention grabbing part?
Yes. And that was the point that of what I had talked about. From this is in a nutshell what are all the topics you may want you want to choose from, and think about, out of all these topics, what is the most attention grabbing, noteworthy thing about you and your company from this? What is the topic that's the most attention grabbing? And then building out a logical narrative from there.
Excellent.
So the first step was to figure out what are the key topics you need to cover from this list where it's not too many, but it's essential ones. So definitely the core topics, and if needed, to demonstrate uh, that venture scale potential of your company, what are other topics you may want to include, figuring out that list, and then reordering it so that you have your most noteworthy topic early on, and then building out a logical narrative from there.
This is
Does
brilliant,
that
by the
answer?
way. Yeah, this is absolutely magic. So for everybody to hear, you're we're learning from the you know someone with the authority or the expertise or the experience of Patricia that this sequence is less important. You identify the thing that's going to grab someone's attention, and this is something that we actually worked on for 2 hours yesterday. How do you grab the person's attention? And Patricia, that was also one of my secret ways of not just logically, but also if you know what's the most interesting thing of for yourself, then you see what is the best logical sequence of the remaining slides, and you can play puzzle with them so long as you grab their attention, because your biggest risk is them tuning you off in the first 2 minutes.
Exactly. And just for reference, I've seen thousands of pitches. I've worked with hundreds of founders in helping them pitch the best they've ever pitched in their life. And so this is the key step in storyboarding the narrative, is a key step that's missing, that people don't talk about, is you need to figure out what is going to grab someone's attention from the beginning, and then building out a logical narrative from there.
A follow-on question to this is from Alan. For an early stage healthcare venture or any venture in general, where we have a working minimum viable product and a strong problem evidence, but are still validating the buyer, pricing, and pilot economics, how would you balance showing enough ambition for the venture story without presenting our hypotheses as proven facts?
Okay. So for example, there are founders who tell me, oh, we didn't include the pricing in our pitch because we're still figuring that out. And I say, which startup is not still figuring out their pricing? Which early stage startup is not still not figuring all of this out? They all are. And I would say if you don't have, especially with healthcare, I don't know whether you need government approvals or anything with what you're developing, but there are other ways to show accomplishments or achievements. For example, one company I worked with, they didn't have any traction in terms of revenues yet, but they conducted 200 user interviews. That's amazing. You don't find that often. So that's a form of traction to say, okay, we interviewed 200 potential users. This is our findings from those interviews. That's amazing too, because that's going far above and beyond what other startups are doing. Any
Perfect.
other questions, Roy?
There are some, but they're gonna show up a bit later,
Okay,
such as once we get
great.
to the ask and how and why and how much do you know how to value. But this is not like it'll come when its time comes.
Okay, great. So once you've figured out what is your most attention grabbing, noteworthy topic, and then you want to build out a logical narrative from there. So where it's a logical sequence of those essential facts, where it's just flows very logically, seamlessly from one topic to next. So it's easy to follow, and you need to kind of anticipate and mimic how the audience would be thinking.
Yes.
And then from there, I want you to take that extra step and talking through the narrative. So once you figure it out, okay, this is my sequence of the topics, think through from one topic to the next, what is that segue, transition statement, from that first topic to the next, into the next, because you you want to make sure that it actually makes sense. And when I say a segue, it is not saying from slide topic one to topic two. It's like when you get to topic two, you're not saying, okay, now I'm going to talk about this. That's not a segue. It's like, because of what I talked about in one, now this means blah, blah, blah in topic two. So you need to think about what is that transition sentence from one topic to next. And through going through that, it will often expose deficiencies in that logic. So then you may need to go back and forth in terms of even sometimes you need to adjust the key topics that you cover, or you need to resequence things. And oftentimes I'll just use like post-it notes, and then so I can reorder it easily and kind of see the layout. And once you figure that out, this is a backbone of your entire presentation. So really take your time. And as when you come up with a narrative, it really helps you, it'll help you develop your slides content as well. And with this, I want to now take a moment to talk about storytelling because you often hear the importance of storytelling in a pitch. And I think that word is very misleading because storytelling is an account of incidents and events, and there's no intention to adhering to a set of presentation goals. It's often confused for story time. And so I think it's more important to have a narrative, which is a representation of a subject in a logical sequence to achieve a set of presentation goals. It's being very intentional on making the decision on what aspects of a story to relate and in what order to achieve that set of goals.
Patricia,
Storytelling
for
is
that,
not mandatory.
sorry, for that prior topic, can you give maybe one more like example of what's the difference between storytelling versus narrative?
Right. So narrative is storytelling is where people there's different types of storytelling. One very common one is to start off by giving a personal story or a story of someone who experiences a problem that you're solving and just talking through their whole story and then leading to the rest of your pitch. Or you may interweave you may start with a story and then interweave that account through the um entire pitch. But a narrative is really about the sequence of the topics that you're going to cover. The storytelling, I think, is more seasoning in on a food, or it may be, I shouldn't say seasoning because that's saying it's essential. Storytelling is kind of the extra to kind of help people understand what you're building, but it's more like I'll give example. So I worked with a founder who has a event and party planning business. And they came to me and said, "Oh, I've heard you have to have a story to talk about the company. So, but the only story I have is I gave a party once. And then that was it. And then so I'm like, okay, that's not really helping people feel the pain or feel the problem that you're trying to solve, right? So it's really a story of this happened, so and then as a result, this happened. Whereas the narrative is really talking, describing, explaining a topic. Does that make sense, Roy? Is that clear enough of a
Absolutely.
distinction?
And in a pitch, we want to prioritize narrative over storytelling.
Yes, so storytelling is not mandatory. That's what the whole point is. You have to have a logical sequence of topics where the narrative flows from one thing to the next. Because if you're talking about this thing and then you jump to this thing and then you jump back to this thing and then you're kind of jumping around, what that comes across is you don't know how to explain things properly and you don't have a sense of logic. So if you don't have that, then how do you even solve problems or how do you even talk to customers if you don't know how to explain something in a logical manner that people easily understand?
Yeah.
That's why it's so important. If you have a story, that's great because stories engage and help people understand and retain information. But you need to be super intentional on what aspects of the story to relate and when, and include just enough of the story to get your point across, um, so that it doesn't detract from the main topic of what you're talking about, which is your startup. And people, if you go down a rabbit hole of talking about a story, then people may get lost or confused or lose sight of that main message. the thing about story is people who are giving stories often give too much information about the story, and people, while that story is very memorable, then the 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 thing that happens is the audience then is thinking more about the story than really about what you're building.
Mm.
And they'll remember your story, but not anything else about your company, which is the part that you really want them to remember. So it's about balancing that if you decide you want to have a story.
Perfect.
And so once I've storyboarded out the narrative, by this time I can envision my pitch and I have an idea exactly what I'm going to talk about for each of the topics because I already know how the whole thing will flow from beginning all the way to the end. And I find that the narrative is often more challenging because you're architecting that entire arc of your pitch. And then after that, while it's not easy, you're then populating the content for each of those topics. And where you are thinking about what is the most concise distilled way to talk about the concepts and for each of those topics.
Mm-hmm.
So it's important to, when you're thinking about each of the topics you're going to cover, that you want to explain the concepts appropriate for that audience level event. Because if your content is too challenging, then the investor audience gives up trying to keep up. And conversely, if it's too basic, then people's minds start to wander. And you want to restrict your messages to only one or two per slide. Really, ideally, only one message per slide. And then whether you're aware of it or not, everything that you're putting on any of your slides, the order, that sequence of what you put, the topics that you cover, also the sequence of how you arrange the slides is all demonstrating how you think. And so now I'm going to go through each of the core topics and give you some examples. And I want to give a quick disclaimer on those examples. For the examples that worked well, do not use them as a template. Those are just examples of what worked well for that company at their particular stage. And so don't copy them, but I'll walk through what I thought worked well and what didn't work well on some of those examples.
And Patricia, maybe before diving into this, while people are still wondering what to put in their presentation, there are some people in our community here who are afraid of revealing too much because they're still in the very early stages. How would you treat that? How much should you reveal or not reveal?
Revealing too much.
Say you're in
Because
agribusiness. Yeah, so say you're in agribusiness, you're afraid that someone might steal your secret sauce, steal your idea, and you're wondering how much you should put in that pitch. And you're afraid that if you send it to an investor, they'll just not respond to you, take the idea, pass it on to someone else, do it themselves, and there you go, left with nothing.
Yeah, so the thing that I found in having seen thousands of pitches is that it's rare to see a completely new problem that's being tackled. So the solution may be different. You have to weigh it. So first of all, no investor will sign an NDA, so non-disclosure agreement. No, investors will not sign that. So, but they usually will, the majority of the time, but not all the time, they're not going to share that information. But you have to reveal enough so that you're they get interested and they want to give you money. When you say super early, the thought that so for example, if you're a software company that doesn't have any traction yet and you're raising, then the question will be, why are you raising before you've had revenues? Because it's so easy to um, get software out there now and to get some traction. If it's around biotech, then the question is, okay, then you can get IP and get trade patents. on the technology that you're solving for. So but at the end of the day, yeah, you need to weigh it. So you need to think about, yeah, you don't want to reveal everything. What is it? What makes this special? What makes this work? Versus how much you're going to review, like how much you're going to put into your deck. So, for example, I'll give you a personal example here. I'm going to be sharing my slides from today's lecture after this event, and it's to thousands, tens of thousands of people who will now see it. Usually, I don't share these slides except in very close groups. And the thought was, oh, they're going to see my material. But at the end of the day, I figured out that it's not the material. The material people can get, but it's really the mind and the way that I'm looking at things that is a true differentiator. And that's why I'm willing to share that, because by the time that someone copies this, I'm on to the next thing, or they're not going to be able to replicate the way I think about it. This is just like if you have a textbook, uh, you can give people the same textbook, but people will use it in different ways, and there's different depths of usage. And then with your startup in the pitch deck, I would say every company has this problem, but they need to, so it's really thinking through, okay, what can I reveal enough to get the attention of the investor? And then when they're interested and you progress to the next step, then you reveal a little bit more. And then sometimes at that point, then you're going to have to sign an NDA to see the data room and see more about what you're doing. But yeah, you always have to be careful, because there are times when investors express interest just so that they can learn more about what you're doing, because one of the other companies they've invested in is doing something similar. That is a risk.
Okay. But I
Okay.
mean, in general, just for everyone to know, if a VC makes 30 investments, seen 600 ideas and pitches, the chances are they've seen a lot of these ideas. On top of it, you can imagine how busy you are, you can imagine how busy they are. The likelihood of someone stealing someone's idea and being that free is very low. And you're much, much, much more likely to receive constructive feedback and support, and it'll help you see things that you hadn't seen while you build your thing, if you share your idea than if you stay holed in, because ultimately your idea is probably taken from an amalgamation of ideas that you've heard in your past. And it will refine like crazy over the next few years. So the idea in and of itself is not necessarily ultimately the business. It's the execution of this thing. It's the secret sauce of how you're able to do it yourselves, where you're particularly skilled at doing something, in which case a VC is much more likely to back you.
Right. And I think you'll find that you can talk about it enough where you're not feeling like you're giving everything away, all that information away.
Yes.
Okay, so now I want to go into each of those core topics. The first slide is the title slide, and people often skip over this slide, but this is actually a really important slide because you're introducing your company for the very first time. It's your company name, logo, kind of aesthetic, color palette, but also very important is your tagline, because the first time that someone sees your tagline, if you have a great tagline, it's giving them the idea of what they're about to hear about. And then after the pitch, when they see the tagline, or they can use your tagline to explain what you're doing. That's only if you have a great tagline. But this is why that tagline is so important, because you're giving the investor the words to describe you most accurately. It's that tagline is short, I would say 4 to 6 words, or of very simple words, simple everyday words, and defines what the company and product is about. And if the topic of your company is difficult to relate or understand, tie it as closely to something that people can relate to. So I like to give the example of a semiconductor company startup. And so that's not something that people often think about, but you could say, okay, we make chips that make blah, blah, blah possible so that people can get an idea of what you're building and tie it to something that they actually can relate to. So this is an example of a title slide that I thought was done well. Yes, it's a quite old title slide, but I like it because it has clear
Oh,
company name,
Patricia, I don't
logo,
think you're
and
sharing your screen if you think you are.
what? What's that?
Are you meant to share your screen? Are you expecting to share your screen?
I am sharing. Can people see my screen?
Oh, my fault. I can't see your screen. It's on my side. Sorry.
Okay.
There's a lot of thumbs up. Everybody's with you. I'm just lost. I'll refund.
Okay.
Sorry.
Great. So, so I like it also because their tagline is super easy to understand. They have their names on there and their uh, the date, the version date of this pitch. The thing that is not there, I like to include is the contact information. Make it easy for people to find your contact information so they can contact you to with questions or write that check or follow up with you. So I also like to include contact information on the title slide. This next one looks nice, minimal. If you just saw this title slide, you will have no idea what this company does. Could you even guess that this company is a health insurance company? No. So, in the tagline that they have, simple, friendly, smart. Can you imagine if I were an investor trying to describe this company, Oscar, to someone else and say, oh, yeah, they're simple, friendly, smart? No, I would be laughed out of the room. So, that's why that tagline is so important. And then the problem slide is about the problem that you are solving. It is not meant to be a laundry list of all the problems in that space. It is exactly the problem that you're solving for and focusing on the key problems and be concrete and relatable and make it really easily understandable on why this is a problem. If the audience doesn't buy into the problem, they're not going to buy into your solution or the rest of the pitch. And they're not going to understand the relevant significance of your solution. But at the same time, don't spend too much time on the problem because the problem really is a stepping stone to your solution and everything else. And that's why it's there. So make sure not to spend too much time on the problem or else you will sound defensive or unsure about making about the problem. So here's an example of a problem slide that I thought was done well because I love it when the slide titles are just are impactful and actually mean something where it doesn't say something like the problem. So if people um can read, have a lot of different options to read this slide. They can read just the title of the slide, or they can read also the subheadings in each of those sections, or they can um, read all of it. So I love when you have a lot of different options to read a slide because that really ensures that as many people read as much of the slide as possible. This problem statement was not done well because it has so much content and it's forcing me to read every single word on every single line to understand what they're saying. And again, that slide title there, the problem, that's not helpful. And then also the first sentence of this problem statement says building meaningful relationships with customers is hard. Well, that's too general and daunting. They're going to solve that problem. It's like boiling the ocean. Yes, this slide is taken from an early pitch deck from Intercom, which is a multi-billion-dollar company today, and they rebranded to Fin. But this early iteration of the problem statement was not done well. And then the solution is about the solution or a product that solves the problem, and you want to tie it back closely to the problem statement. So it needs to be very tightly coupled. If your problem is ABC, your solution needs to solve exactly for ABC. And then be really clear and brief on exactly what is the solution. You may decide to have two separate slides, one for describing the solution and one for talking through the product. But don't use screenshots. It's because no one's going to really look at those screenshots. It's the year 2026. People assume that if you're doing software that it works on all devices and it looks nice, clean, blah blah blah. So, but you want to talk about what the product is to give people a glimpse into how it works or what is the user experience. Be really clear about whether it's a service device or what exactly is that solution. I've heard pitches where the company pitched for 10 minutes, and at the end, our group of investors were still not clear what that company's solution and product was. So just be really clear on what that solution product is. And if you're using a use case, just make sure that's understandable, believable, and concise. Include just enough of the information that the intended audience understands. Again, they need to be able to explain, describe your solution product after hearing your pitch only one time, and being able to describe that venture scale potential of that. So here is a solution slide that was done well because again that slide title describes exactly what that solution is. It has the 3 white banners that describe the aspects of that solution. The graphic on the right is great because it shows that there is a software app component and an actual product component to that solution. So it's very intentional. While this solution slide looks nice, it's not very effective because I, as an audience member, seeing this for the very first time, I'm trying to figure out what is this diagram and figure out what's going on with the sequence. And then I have to notice, oh, the dotted rectangle here shows what that solution is. I have no idea, even looking at this slide, whether the solution is a hardware solution and or a software solution or a service. I have zero idea about that. So this one was not as effective. The business model is simply how you plan to make money. So what are you selling to whom and how much? So what are you selling? What is the product? Right? Just reiterating very brief again. What are you selling to whom is your ideal customer profile? So it's make it clear that you know who your customers are. Don't say something like, I'm selling this to all parents. And I think the investor will think, oh, how are you coming up with that customer list? Or you're selling this to all businesses. Okay, how are you determining who's on your potential customer list again? So to whom is you're describing your ideal customer profile enough so that the investor audience knows that you've really given intentional good thought into who is your customer. And the how much is we want to understand your pricing model. So we don't need to know if you're doing tiered pricing or different packages. We don't need to understand everything that's included in each of those tiers or package, but we want to know the order of magnitude you're thinking about the pricing. It's really indicating how you're thinking about the business. So are you charging $1, $10, $1,000 per seat, per month, per user, per company? We just need to understand how you think. Yes, your pricing may change and will probably change as you go through the start, but we want to understand what is your current thinking around the business. If you have a alternative pricing model, so for example, if you're doing a marketplace or you're taking a percentage of a transaction as your revenues, give the approximate revenues for the typical account, right? This slide is meant to show how you plan on making money. So the investor audience needs to understand what is the maximum revenues you're going to make from your company. So that's why you want to really demonstrate that. So this business model, I've blurred out some of the specific information here, but it's very effective because that title just says it's usage-based pricing. Oh, we immediately then know, okay, that's kind of how they're approaching the pricing. And then it's saying who's buying. Okay, Series A to C technology startups with, and then with this many employees, I know that they can easily find and get their potential list of customers, and they know exactly who their starting customers are. And then on the right box there, it is revenues per customer that it shows, okay, here's how they're charging for their product. It's very easy to read. So this other slide is a business model. It's again so much text. It's forcing me to read every single word, not every single line, to figure out, cobble together what is your business model. And truthfully, I've read this a few times. I still don't understand what is their business model. And this company, Amplify, they raised Series B and got acquired by Cart. But this early iteration of their business model slide is just done very poorly.
For everyone here, keep in mind that learn from each slide. Like if your slides look like this, then it's just important to know what not to do. We're going to have the second, the last 45 minutes going into certain pitches, but it's since we have hundreds of us here and very few of us are like, it's a small percentage of us who are actually going to be able to have the whole presentation, and many of us don't have our pitch decks ready. So what I'll ask from some of us, and if you could please in the chat stop putting LinkedIn profiles, they don't help anyone. Instead, if you have a key question, share it. And if you have a pitch deck that you do want to share, please share a link to your pitch deck. I'm going to review them, share them with Patricia, and we're going to do a live review, critique. But at the same time, while I'm looking at these slides, I'm realizing what slides, like I'm fixing my own pitch deck for Ken's, where we're going to be pitching in 12 days. So please do the same on your end as well. Yes, we are recording this session. Yes, we're going to share it with everybody. But most importantly is use every slide here, not as theory, but as practice, where you have your pitch deck and you're improving things and you're like, okay, taking mental notes. This is too busy. If Patricia couldn't read this after having read it a few times and having given it all that patience, maybe I need to simplify my business model. So please keep doing that, and then use the chat to send individual pitch decks and key questions that are coming. Back over to you, sorry, Patricia.
So the next topic, and again, it's not a sequence, I'm just the topics I'm covering, the core topics, is traction. And it's really about what you've done so far, where you're at today. So, and it is about your accomplishments with momentum. So your accomplishments are great, but we want to know as investors, did it take you a week to get there, or a month, a year, or 10 years? It's a very different story in terms of how long it took you to make these accomplishments, and really focus on what's notable from an investor perspective. So what things like traction, accomplishments from a product, revenues, partnerships, grants, awards are notable from an investor perspective. Not as notable from an investor perspective are things like you hired your first employee or you established an office. That's not really showing how you're leading, growing this company to more revenues. There is a hierarchy of traction. Revenues, cash is king, so that's the best. If you have revenues, that's the best to show early on your traction slate. Number of users or the types of or logos. So, for example, if you've been able to work with some great companies that are very well known, that's great. That's very good traction, and that's after revenues. That would be very notable. Design partners that you have, et cetera, et cetera. So really think about what are investors looking for. They're looking for revenues, which then or your venture scale potential, right? So what is going to really demonstrate that venture scale potential? And organize and list it by categories wherever possible so that you're showing that you have accomplishments on a lot of different fronts. And you want to represent all of that in an easy to read format. And I like to use what I call swim lanes for something like this. So on the top, it has a timeline of here's your momentum. And by quarter is a good chunk of time for a startup world. So by quarter, what have you achieved? And then in these different areas, these three areas here are the top one is what's most notable from an investor perspective down to less notable from an investor perspective. And so it's super easy to read in this kind of format. I like to use this swim lane format for both traction, which is past looking, where we are today and what we've done in the past few quarters. And then I also like to use this format for the ask slide, which is with this money, we're going to do XYZ. And then it's like more forward looking. But this format I love because it's showing the momentum and very specifically the accomplishments and be specific, use specific measurable accomplishments. And then the team, it's about your leadership team. I want to take a moment to stress the importance of the team slide, especially for early stage startups. There was a study done where they interviewed 900 VCs. And they asked, what is the top thing that you look at for on an early stage startup? 53% of those 900 VCs said it was the team, compared to only 12% of those 900 VCs said the top thing they look at is a product and the technology. Really let that sink in and think about how important this slide is. And I can't tell you how many times I see a team slide where it's just people's photos or entire group photo of the team. And I think, how is this slide demonstrating that venture scale potential of the company? And it shows that the founders don't understand what investors are looking for. So this slide is about the leadership team. It's not about your entire team. It's about the leadership team with their name, photo, title, experience, and any recognizable logos where they've studied or where they've worked. But they have to be recognizable. And the experience should be the relevant experience in decreasing order of relevancy. So most relevant to lesser relevant as it pertains to leading and growing this startup in the position that they're in. It needs to be specific, measurable. Don't include just logos, because when I see just logos, I don't know whether that person was the assistant at that company or the CEO. And it's really about how each person on that leadership team is a rock star, but how the whole team covers all bases to run a company well. So if you have a team that everyone is a rock star in the same area, then I'll be thinking, what about the other areas? Who's covering that? The photo should be professional, high resolution. But remember this, investors, we don't really care what any of you look like. We want to know what is that relevant experience. So really keep that in mind. So here's an example of a team slide that was done well because all the photos look consistent, professional, as their name in a different color font. It has their titles, and then it has their previous experiences. The two things I'm not a big fan of is here, I would have like to see the specific measurable things that they accomplished at their previous jobs. So I don't want to see 15 years, the number of years you were at someplace. I want to see the actual accomplishment. Grew a team from 0 to 10, grew a revenue from 0 to 10 million, whatever that specific measurable thing is. Having been somewhere for a number of years is not really here nor there, so it's not helpful. The other thing I would have changed on this slide is actually put bullet point symbols in front of their relevant experience. So it just draws the eye and makes it easier to see that there are three different things, even though they have line spacing. It just really helps for easier reading. So this slide was not done as well because I don't really care what any of the team members look like. So they're giving me their photos, their names, and titles. It doesn't give me, any of their relevant experience, so I don't know why they're qualified to be in that position. Again, those logos, I don't know whether there were the assistant there or the CEO there. I don't know anything. So this team slide is not helping their case for demonstrating that it's a venture-ready, venture-scale company. And then the ask slide. It is the amount being raised and how will the funds be used. That includes the milestones you plan on achieving with those funds. It is not about the percentages that you're going to use that money. We as investors have no doubt that you're going to use up all of the money that you raised, even in the percentages that you said, but we care about what are you going to achieve with that money. What are the specific measurable milestones you're going to achieve? And yes, with everything I've talked about, the narrative and all of that, the ask is usually at the end of the pitch. And you want to use SMART milestones as specific, measurable, attainable, relevant, and time bound. So again, if you use swim lanes on this, it helps to really quickly show that you've given a lot of thought into the game plan. Be ready to respond in terms of valuation, discount, minimum check size, strategy, rationale. I would say in terms of content wise, problem solution is usually the hardest for a founder to construct those slides because they want to say everything about the problem solution. But the ask slide is the one that founders most often stumble on during the pitch because most of us are not used to asking for money and we're not comfortable with that. So my tip to you is as you're practicing your pitch, practice this slide many times. Think about the questions that are going to come up and practice your answers to those questions because investors are very sensitive to picking up those the nuances of during a pitch. And if you are when the ask slide, you're kind of, not, if you seem even a little bit comfortable, they're going to pick that up. And then the question is, why are they uncomfortable? Are they not feeling confident about the ask, the amount being raised, or they feel like they don't deserve it, whatever that is. So a lot of other questions come up about the founder. So just state very simply, matter of fact, state, okay, we're raising this much and we're doing this with it, and just leave it at that. Don't over explain because then you'll sound defensive and unsure. Just be very matter of fact about it and practice a few times more than the other slides. So here's an ask slide that I mocked up, which I like because it's simply saying this is how much you're raising. You're not trying to say a whole bunch before that. You're just very simply stating it. And then this is what we plan on doing with the money. I like how it depicts, by quarter. So what your game plan is showing that you've really given some thought. Then here are the areas you're going to focus on each quarter with that money. The one other side note I'll say is right now, so at least US statistics wise, early stage startups, we're looking at runways of 1,000 days. So I still see a lot of pitches which say, okay, we're raising this much for an 18-month runway. And I would say it's now 1,000 days, but you don't need to talk about runway on your slide. Just say how much you're raising for. But when you're figuring out that raise, think about what is the typical runway for your industry startup and what that current figure is so that you sound like you're well informed. This is another slide that was done okay. I'm not as big of a fan of it because it's not saying when they're going to achieve what by when, but at least it's specific enough that I know that these are specific measurable milestones and these are the areas you're going to focus on. And then here's a sample of a slide that is just not done as well because, again, we as investors don't care what the percentage of your raise. If you're able to do it with all of your money in team development, but you're able to, achieve your 100 million ARR very quickly, then we don't care. It's about the revenues and your valuation. So don't just tell us here's the percentages. How does that show how you plan on leading and growing this company with targets in mind? It doesn't. And along with that, don't say we're raising this amount to reach this much ARR. You don't have exact control over your revenues. We want to hear what you as a founder plan to do, and what is your game plan for achieving that revenue. The final thing I'll say is some investors will suggest don't include the ask slide or change your ask amount depending on who you're pitching to. I myself am pretty simple. I like to seem open and honest, and I like to include it because you're going to be asked about it anyway if investors are interested. And I don't want to have different amounts I'm quoting to different people. It's very hard to keep track of. So it's about you knowing yourself. And then the closing slide. This is what you often see as that final slide where it says thank you with the contact information. This slide is actually one of the two most important slides in your pitch because oftentimes you get to this closing slide and you go into Q&A. And guess what's on the screen the whole time you're doing your Q&A? This closing slide. So most decks you see, it just says thank you. That's not very helpful. Say something worthwhile. Simple final message or call to action or remember about your startup or pitch, right? Because people are going to be staring at it for a really long time during that Q&A, so make it count. Include your contact information. In general, when you include your contact information, include an email address. Don't have a generic one because these are to investors who are writing big checks. They don't want to feel like, oh, it's going to an info email address that may or may not get answered. They want to know the one specific person they need to contact and their email address. And I like to include phone number because I want to make it easy for potential investors to reach me. Mm. If you have an appendix, include this closing slide at the end of your main pitch and at the end of the appendix. Again, make it easy for people to find your information. Avoid cliche conclusions like thank you or join us to change the world, blah, blah, blah. Then I want to go into a couple of the as needed topics now. And so Roy, I don't know if we'll have time to go over the Cannes pitch, but I don't know how much time we'll have for that. But I'll go very quickly into market size and competition. And again, as needed is not optional. It's as needed to demonstrate the venture scale potential of your company. So market size, it is not just about the numbers. We often see a market size slide with just 3 numbers, TAM, SAM, SOM. And numbers tend to be very speculative and not believable, especially for early stage startups. For many VCs investors, including myself, they're not essential. If a company includes this slide, I usually see whether they understand exactly what market sizing is about. And I look at it to see whether the founders are dreamers, pie in the sky dreamers, or they're more realistic. This slide is really about explaining your approach in thinking around the market size. It's similar to those McKinsey case interview questions where they ask you, how many food delivery drivers are there in New York City? It's not about the number. It's not about them testing you whether you know that number. It is about them testing you on what you know, assumptions you're making, and how you map out that solution. This slide is that same intent. So, it's about explaining that approach. And so if if you include a market size slide, use a bottom-up analysis. You can look this up online. It is really doing a calculation based on your business model and pricing model multiplied by a potential number of users in each of the market segments that you're going after, and then added that up. What is your total addressable market? And when you do that, also make sure that you have you're showing your math. You have, if you're using any sources of in your calculation, make sure that there are solid recent sources of information, and it's realistic, specific, thoughtful, believable, and logical. The general tip about any slide with a number, numbers are very black and white. So you need to double, triple, quadruple check them, because as soon as people, the audience, starts to have a doubt about the numbers, or they start questioning it, they will start questioning your entire pitch. So it's super important to really check those numbers. Here's a market size slide that I thought was done well. It's very busy, so I would have included this more in an appendix, and the aesthetic is not the best, but I like it because it shows the bottom line, the end result, the total at the top of the slide, and then it shows the math, exactly where all of this is coming from and the assumptions that they're making. So this slide is really convincing in terms of, yep, they really know their market. This slide was an example from the Mint company, which you saw the solution slide for earlier. This market size slide was not done as well because there's so many numbers, and then there's the numbers in the circles, there's the numbers on the right, and then there's a color coding where you're trying to match up the circles with the legend on the right. And I'm wondering how the founders expected the audience to interpret the slide beyond the numbers, and why they expected the audience to just accept these numbers without any proof or evidence. Now the competition slide. Every company that has a competition slide is saying the same message. We're the best in these areas, according to us. Has anyone ever seen a company that says they're second best? No, they all say they're the best. So it's not a very meaningful conversation, because of course that company will select the criteria they excel at. So I'm always thinking, as an investor, what aren't they saying? If those competitors are true competitors in still in business, what are they good at? So, and then something like the power grid you see on the bottom left there, the sheer amount of information can make it really unrealistic to expect the audience to actually read and study that. And you look at the row headers there. Does the audience even understand what each of those row headers mean? What those benefits and features that they're saying mean? Because if they don't, then it's a waste of space, and you're just distracting them from the main message. Yes, you definitely need to know your competition. Yes, you need to be able to talk to them about them in a very insightful, intelligent way. But it's not saying that you have to include your competition. I think it's much more important to think about what is that meaningful message behind what you're saying around the competition beyond the we're the best. So it's about what is your moat, which is your current moat, and then your defensibility for a more future look at what's preventing another competitor or another company from throwing money and resources at it and developing something better in a shorter amount of time. What are the barriers to entry? What's transformative about you? Often I see people, especially AI companies now, talking about the moat in terms of, oh, we have the data flywheel and we have network effects. Every company is saying that. So that's super trite. And if a pitch says that, then I think, okay, the founders are not thinking deep enough. And what else aren't they thinking deep enough on? So really think about, what is your moat? And the moat, it may be something like in terms of your intellectual property or your access to certain connections, something, really think about what that is for your company and really be able to speak to that. Because even for companies that have a competition slide, when they're asked about the modes and the defensibility, they stumble on that answer around that. And this is really what investors are thinking about. Not that what the competition looks like today and where are all those points, but really what is that moat and defensibility. And then so after you've populated the content, then you need to refine and polish the slides. Because even if you have great content, if you don't know how to structure the slide to communicate well, then your message is diminished or lost. And in the interest of time, I'm just going to summarize a few of those points around refining and polishing. Distill, distill, distill. You want to really think about what is that essential information and exclude everything else that may distract from that. I mentioned earlier restricting to only one main message per slide. Use simple words, everyday words, and use simple sentences. Be really succinct. Long words, long sentences are just speed bumps for the audience or investor to understand what you're saying, because when you use those long words and long sentences, we're having to mentally translate what you're saying into the simpler forms that we can understand. Making it readable is about presenting information, digestible packets, and with different options to read that slide. I've mentioned throughout today's session, I've mentioned examples where I really love the slides because it provides a lot of different options to read that slide. So as many people as possible read as much of the slide as as possible. And then presenting it in digestible packets makes it more approachable to read, so it might actually have a chance of getting read. And then being really intentional and restrained with the use of graphics. So don't include photos or images just because it makes slides look nice, because they're distracting. And why are they're distracting it from the main content that you need to get across. So really think about it. If you're including charts and graphs, include the main message at the top so that the audience doesn't have to read and study that graph to understand what you're trying to say. Include the main message and then include the graph, because people read from left to right, top to bottom. So you start with the main message and then show kind of the backup if they want to read and study it. Constructing great slides. I view this whole topic as similar to furnishing and decorating a really small room. So when you're furnishing and decorating a small room, you're scrutinizing every piece of furniture you're going to have there. You're really prioritizing, celebrating the multi-use furniture where it can do double duty, triple duty. You're prioritizing how the furniture is arranged, and yet the space to walk, to breathe, and feel spacious is really key. And that's the same with constructing great slides. You need to really carefully consider all of your content, trying to say more with less. And you need to really think about the text and graphics, what to include, and carefully arranging it. And because negative space is just as important as positive space on a slide. So, Roy, any questions so far?
All right, so we're going to go for one question, and then we've lined a few pitches, but we're not going to have much time for pitches, just because we're a bit low on time. There was one question. I'm going to give you the answer that I gave just to see if there's more stuff to add or if we just go straight into pitches. So one person asked, is there another format you would use for a nonprofit organization that is trying to raise funds? And then the quick answer that I'd given is the high impact, memorable opening doesn't change. But if it's for a social impact VC, not much changes outside of adding a social impact slide, sometimes called the theory of change. But
Yes.
for a pure grant, then the numbers such as market size, matter less, and it's all about the social impact, the SDGs, and the theory of change.
I go back to consider the audience. Who is your audience? Who is the impacted investor? What do they know? What drives them? What are they looking for? And you can tell by looking at, if you're approaching an impact investor, you can easily see if they're a larger one, they have a website. You can see exactly what they've invested in and see what is a write up for how they're writing up that company, because it demonstrates what they're prioritizing about their investments.
Mm-hmm.
Okay, so drop into the chat what was the most impactful thing you learned today. Give you a few seconds for that.
Oh,
Okay, so
there's also one more question that we haven't gotten to early on, which is how do you know how to value your company and what percentage do you offer?
there's a lot of resources for that. I would say look at those resources and then talk to a few when you're pitching for investors who are interested. When you're starting off, just ask them, okay, what are you proposing? Let the investor drive, like start that conversation, give their number, and then you think about it. So do your research, let the other investor have that discussion or start with the number, and then you consider it. In terms of percentages, there is a clear formula for that, which you can easily search online.
Mm-hmm.
Okay, so I started off today's session by talking about steering towards that ultimate goal, demonstrating that venture ready, venture scale potential of your company in a way that the audience or investor can confidently, excitedly explain it after hearing it only one time. Followed by considering the audience. It's about tailoring your behaviors, actions, and deliverables based on knowing and understanding the audience, who they are, what they know, and what drives them. And then followed by creating a standout pitch. So starting out with architecting the arc of your pitch through storyboarding the narrative. And then I went through the parts of the deck with some examples of what worked well, what didn't work as well, and then constructing great slides or impactful slides. If you remember what I said at the beginning of today's session, if you understood the intent of everything I talked about, it helps you for every facet of your startup journey. So with that, thank you so much for coming. We're going to now review a couple of pitches. I can go pretty fast on them.
Perfect.
Stop share.
Excellent. So we have a couple of pitches lined up. I had set up, and we also are yes, we're going to get the slides and it's all recorded, just like you received it this morning. We're going to have a summary of what we're covering today, and Patricia will share the slides with me, and I'll put it up on the Ken's hackathon page. Patricia, I prepared my pitch deck just in case, and we have a few more. Would you like me to go through my like 3 or 4?
It's up to you. I'm happy to stay later too if you want to go through. I'm open.
Okay, I will have a hard stop at like 05. But if you do want to continue, feel free to, because it's anyways recording to the cloud, so there'd be no issues. And Sandra's with us, but I'll start. There aren't too many pitches, so we can just go for a very, very quick review. This at least can set the mark. Would you like me to just scan through it, or it might be easier if you just
Yeah,
click the
so
decision and give me.
just 2 seconds on
Okay.
each slide.
Okay. 1, 2.
Next. Hold on. I'll prompt you.
Okay.
Next slide. 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 Okay, next slide. Okay, next slide. Okay. And then let's see. Okay, so great. And then can you go into the slide sorter view or
Yes.
yeah, the slide sorter view that I showed you yesterday? Okay, and then if you can make it bigger, you have the magnify in the bottom. Just make it a tiny bit bigger. Okay, great. So I think one of the things that okay, a few things. So you basically went from title to after the title slide, problem, solution, product, and then testimonials, traction, market size, competition, business model, team, financials, projections, ask, and closing. So I think looking at that overall structure, I think there were a lot of slides about the solution. I'm not sure all of them are needed. And the testimonials, I don't think is needed because a lot of your testimonials were from people I don't even know who they are, so they're not helpful. And then traction, market size, competition, but your business model comes very late. So I would have moved business model. How you make money is super important because business model, how you make money drives your revenues, drives your valuation. So I would have moved business model up more. And then with financials is your traction. So I would have put your two traction where your accomplishments so far, put them together. So you had an earlier traction slide. I would put financials with the traction, and I would have put the financials earlier on before the other traction that I would have combined traction into one slide and then really focus on first presenting your revenues. Your projections, it was not clear. You said one through five. You're pretty early stage startup, so I don't think financial projections make a lot of sense. I mean, you don't have enough historical data to show a trend, a long-term trend. Also, just in particular, your implementation projections one through five. I don't know what those one through five were, but projections are speculative and so I don't like to include it. I like to show kind of where that momentum and really focus on the momentum for the audience or investor to kind of tread that out themselves if they want to. So based on that, I think problem solution, and then you talk about your product. And then I would have said, okay, for this product, this is our how we're charging for that and where we've gotten so far. And the business model and traction slides you can play around with, whether it's traction first and then business model, or the other way around. And then I would say, then based on the pricing that I just told you in the business model slide, this is how we calculate the market size. And in that market, these are our other competitors. I would have liked to see, if you're including market size, I would have liked to see a go-to-market more than competition. So how are you planning on, so for example, if you have markets, so market size, this is based on the pricing, this is how we plan to enter and grow in that, or market size based on the pricing, this is how we're calculating the market size, and then this is how we plan to enter and grow in that market, and within this market, these are our other competitors. So that's kind of like the overall narrative that I would change on this. And then for your solution, so starting off with specifics on each of your slides, on your title slide, I think AI enablement for, okay, so imagine that an investor who hears your pitch is now going to use this tagline to explain it to their fellow investors. Would that fellow investor understand it without context? No. So I think you need a more meaningful tagline. And then the problem, so let's go to, can you just click into slide 2, please? Slide 2. Companies buy AI, their people don't use it. So is that really the problem that you are solving? And you have to ask yourself, and then you have to think about what is it. This problem statement sounds like you're saying the sky is blue, because how many investors don't know this already? So think about what is the top edge of what your audience knows, and then build out what is your main insights into that problem. So then I think you're doing something that a lot of founders tend to do, which is leading with numbers. Numbers are only support characters. You need to start with the descriptions because people need to understand it at a conceptual level before the numbers even convince us. And don't use too many numbers because it just sounds inundating. So tell us a what, and then maybe tell us the numbers, and pick a couple numbers only. But it's really about what is the unique insight into the problem that your solution exactly solves for. What you're presenting here as your problems, insights sound too much like a laundry list. It sounds too general that I don't believe that you're going to solve for this exact problem. Next slide is your solution slide 3. So upskill. Okay, let me ask you, who is your customer? And you don't need to answer that, but you need to talk about the problem solution in terms of from the point of view of your customer. So describe the problem from a customer perspective, describe the person who is paying you, and then the solution needs to be from the customer's perspective. And then it needs to match, and I like to almost match the formatting of the problem slide, so it's very easy to follow. Okay, I said that the problem was XYZ. This is what our solution exactly. This is a description of our solution, and this is how it's exactly solving for XYZ. So make it super simple to follow. And then slide 4. This is more of your traction. That's why I called it more of a traction slide. I would have put this, one is you're leading by numbers again, and before you move on, really consider your use of fonts, because like for the numbers, they are serif fonts, so harder to read. whereas your descriptions are sans serif fonts, which are much faster to read. So think about readability. And again, numbers are nothing without their descriptions. And this is what people do again is like make the numbers huge, but then they don't mean anything, but their descriptions of that number is super small. They need to have equal billing for it to be meaningful. I would have, you already have world record holder on your title slide, so that's already planting the seed of what that's like, okay, there's something different. On your title slide, you don't need to go to title slide right now, but on your title slide, I would say world record holder for what? So people know really what is impressiveness, because maybe you're the world record holder for eating number of hot dogs, right? So saying what, and then on slide 4, this would have been so traction. You need to think about this is amazing. So what it is that you're this is more of a traction slide. So the other thing you can do is I know I talked about in the lesson today that start with your most important noteworthy thing first, but your record holder thing is it's hard to talk about that without the context. So you can, when you start pitching on your title slide, you already have that world record holder, and then you can mention it. Oh, we won the world record for hackathons, and then you're just planting that seed to get their attention, and then you'll give more information later on when you can really talk about traction in a meaningful way. So that's another way that you can kind of mention the noteworthy thing, but not have to talk about it fully and then moving on. Okay, so slide 4, I think, is more traction. Slide 5 is this. This is a lot to read. It's not like, why is it important that it's one room? I don't know. Build, don't watch. Okay, so really think about what is the significance of everything that you're saying, and then you're saying 1, 2, 3. Why is it important to know 1, 2, 3? Because if it's not important that it's a process, then it's not, those numbers are not needed. You already have the white boxes there. And then taught on the tools teams already own. This is not a sales pitch, so why do you need to show this? I don't know. How is that going to move the needle for the investor to see that these are all the tools? And if you were going to include this, these are all very well-known companies. I would have used logos instead of the writing that out. But I think in general, I don't know exactly what is your product. So then you really need to focus from the customer's perspective. What is the problem? What is the solution product? And then and really making sure what that one main message, how can they describe it after? Because right now it seems like too much information. I already know some things about your company, but I would not be able to describe exactly what is your product. Okay, next slide. 6. So see it in action. So people, the 2 minutes and 18 seconds, that means that if you include videos, most likely people are not going to watch the video. So tell us the what before, and then have the video as optional but assume that it's not going to get watched. Again, people read from left to right, top to bottom, so I would have included the main message of each of those boxes above the images. And then I don't know why you're showing me screenshots. It's the year 2026. I assume that you have an app. It works on all devices. Tell us, use the space to give me some bullet points maybe, or something else that's actually meaningful content that's going to move the needle for me as an investor. The screenshots are not moving the needle for me to understanding what your company is about. So slide 7. By the way, I know my feedback is very brutal for the whole group, but also notice I'm giving Roy very actionable feedback that he can actually, address. So how we make money. Again, what are you selling to whom and how much? This is so much information. I don't care a single self-serve, single role. Again, I don't know how to read this. I don't know how to very simply describe how you make money. So I would have used something similar to a swim lane format where it's easily readable to see, okay, you're looking at things across. And then so very quickly be able to pick out the numbers and then who it's for, things like that. So reorganizing this so that people immediately understand. It's not in your title there, how we make money. That's not useful, but saying what is a primary approach for how you're making money. It looks like there's subscription based, but corporate. I mean, like, what's a unified way that you're making money in describing that so people don't have to read all the content to extrapolate this is how your business model is. Okay, next slide, 8. Your traction. Very hard to read. I don't like to arrange things in a configuration like this because I don't know. I want to really curate the experience of what I want people to read first, second, third. So that's why I like to kind of do things in a way, like arrange it so it's very easily understood. You talked about the world record, you talked about 3 times now. So really have it in, yes, have it on the title slide, talk about it in this place. But again, so many numbers. How is it moving the needle for me? Like, make it easy for me to understand exactly what is the traction that you've had. 9. Financials, near break even, don't say that. So I wouldn't even say that. So your traction slide, talk about lean into revenues, users, and then whatever else. So don't, like, just make it easy to really understand all of your traction. And I like it on one slide because if think about how it may be used at your deck may be used after the meeting. People can just flip through it and just have a consolidated view of all of your amazing traction in one place, and they don't need to kind of hunt around for it. Slide 10. I have 4 minutes. 2 large markets, 1 wedge. Bottom up analysis using your pricing model. So if your business model is 2 different pricing models, I mean, try to follow the same aesthetic to the market size so that it's very easy to see how that correlates. Again, a lot of numbers. Yes, it's a large market size. I mean, that's the thing. Like when I see something like this or like a market size slide, it's like, yes, you're saying you have a large market size. Which company is going to say that they have a small market size, right? So tell us something more beyond that. The wedge is a go-to-market thing. So if you're going to have a go-to-market slide, then make sure that it is. I like to do 3 phases of a go-to-market. What is go-to-market? How you plan to enter and grow in that market. So phase 1, this is our wedge. And why is that? Describing the wedge and why is that our wedge? Phase 2, once you've conquered the wedge, what is the next market? What is that market and why? And if you can include the how without including too much information. And then the 3rd phase. I like to show that this demonstrating your strategy for entering and growing that market. Slide 11. Competition. How is this moving the needle for investors, right? AI training for companies. That's so fluffy. I don't know what that actually means. AI certified talent. I don't know what that actually, yeah, so, and then your moat, where is the description of your moat? Because you said you have a moat, but you didn't say what it was. Slide 12. I would have put, so this slide, again, hard to read. Do I read across and then the second row or read down? Your titles are not prominent enough, and I would have put bullet points so I don't have to read every single word on every single line. By the way, one of your earlier slides with the problem or solution where you had a large block of text, bold certain words so that people can pick out the important words so you're not forcing them to read all of it. On this, I would have put bullet points, your name, and then your title, and then I don't care where people are located. It's a worldwide economy now. And then bullet points, and then bold certain words to really things have certain things pop, and then some logos. It of leadership team only. When I see a team slide with so many names, my immediate thought is that's an expensive company. A lot of expenses right now. How are they supporting that? I want to know who is the leadership team and really make them shine as opposed to saying the whole team. Slide 13. I know you go. Um, 3 engines to 30 million ARR. Again, I don't know the 1, 2, 3, 4, 5. I don't know what that means. Again, I've told you how I think about financial projections. Slide 14. I need smart milestones and uh you need to say more. What is the investor looking for on this slide? They want to have an idea of. I would leave out the post money, like that doesn't need to be there. I should say 300 remaining of 1 million seed, and then raised from. I would give less there. I mean, yes, 300 of 1 million is 700, so you don't need to repeat that. Use of funds, specific measurable milestones. Slide 15. Let's enable entire region. No, like that's fluffy. Leave something actually meaningful and your contact information. I know you have it there, but it's your font is so small, make it prominent, very easy to find. Okay, so that is it.
Awesome. That was out of 2 seconds, 2 seconds, 2 seconds, 3 seconds per slide. This is how much information can be extracted by a seasoned investor. So and it's good that we're sharing this because then we can be a bit more, it can help a lot of people, right? Because this is going to be up on our blog. So everyone, thank you very, very, very much for dialing in. This was a really insightful session. It's a bit different than the others because here we had a lot to cover in just a span of 2 hours. Patricia, thank you so, so much. Really appreciate you. Thank you so much for donating so much of your time. Everyone, please give a big heart to Patricia, who can give it straight, tough love with all the experience that she has. Patricia, this is for you, all these hearts. I take a screenshot here. It's really cool.
Thank you.
Thanks so, so, so much. And next steps, everyone, not too sure, just because here we are 1 month after the hackathon. But for anybody in Saudi Arabia, we're going to be pitching at Leap, and Leap has given us free tickets that we can share back with you. And for VIP, it's 25% off tickets. So we'll share that with everybody who's in Saudi Arabia. So thank you so, so much, and we'll just stay in touch and keep going from here.
Thank you, everyone.